Hey guys, Omar here with a little update. So at the beginning of the week, we were looking for the breakout. I personally thought it was going to head up, but this is why we don't get held on direction. We only look for what the market is telling us. We don't try to predict the market. We don't try to look at Ukraine and say, oh, this is going on in Ukraine. Oh, gold should rise. Same thing happened with Crimea. The markets don't care about Ukraine, okay? I care about Ukraine. Of course, we all care about the people, but the markets, and we have to look at this from a cold financial perspective, doesn't care. Just doesn't care, okay? So we are traders interested in what the markets are telling us. The markets only care about big economies doing things to other big economies, and unless Russia and the United States get tangled up together, I seriously doubt we'll ever see anything Ukrainian, whether Russia destroys the whole society or not, ever play out in the markets. So let's talk about the setups. You can see I've added a couple lines here. As we progress through the week, I identified a trend line, this little rising trend line here. And we actually had two trend lines on top. Let me go ahead and zoom out. This was such a big move today, and boy, was it a good one, that it's kind of hard to see unless I zoom out. Okay, so you can see that we were in that sideways pattern, and there were actually two trades to be had here. There was a higher risk trade and then a lower risk trade. So we had correctly identified the breakout area that we were interested in, which was 1305 on the bottom and 1313 on top. We had a lot of poke outs. It was funny, I was kind of trolling the forums earlier in the week, and people were talking about this candle here being a breakout of this trend line, and you can see that when you apply the trend line, it really never broke out. It looked like it was going to, but it never did. Didn't close above 1313, didn't even close above the fib area, so that was not a breakout. So we had this sideways action, and then we had this little rising trend line, which I identified yesterday pre-London session. I knew we were going to get squeezed, and I knew the pop was coming. When gold moves sideways for this long, generally the breakout is a healthy one, and so this is where your patience and not taking silly trades pays off. Unfortunately, the trend line that I had identified at the beginning of the week, we had a gentle barely breakout after an extended move up. It was at the wrong time of day. It wasn't a good trade, but then we got locked into that sideways area. What happened next was just, I don't know how else to say it, it was just a thing of beauty, and this is why gold is such an exciting market for us to trade. So there were two entries. One was a higher risk entry and one was a lower risk entry. The first entry was the breakout of the trend line here, and that came almost before New York. I took the entry here, and I went ahead and closed it for 50 pips. I figured this was kind of like a bonus trade, so I just went ahead and deleted my my stop loss on my next trade, which I was looking for. And the second trade was a breakout of 1305, which was a breakout of our range. Placed the entry, and I apologize about the parrots. Placed the entry here, and actually set my take profit at the next fib level down at 1287 and a quarter. It didn't take long. There was never really any drawdown, and I think I got 160 pips out of it. Let's see what the total move was. It was 172, so I got most of it. Like I said, targets are generally pretty difficult, but when we have a nice established fib area that has been important in the past on top of this trend line, it just seemed like a chunky area as far as support and resistance goes. So I went ahead and put my stop just above 1287 and a quarter. So that was 1, 2, 3, 4 hours and 160 pips. Take that to the bank. That was a huge win, and now I can be done for the rest of the week. So we're going into Thursday and then Friday. I will attempt to see if there's any other breakout on this next session. We're going to have to break back within the trend line and possibly down further, so that's going to be kind of dicey. The reversal move, I'm not really sure. So I'm probably going to be done for the week, but I wanted to give a little update so that we could identify the big kahuna trade. There were two good trades to be taken here, and it just, you can see price just breaks through each area, and you can tell by the by the strength of each candle. This was kind of a transitional after the breakout. The next candle went right down to 12.95, which was a identified support and resistance area. Then the next candle broke out, but not before pulling back. So there was actually a good pullback entry. I was already at break even, and I went to bed. It was a nice surprise when I woke up. So then we broke out again. The next candle continued through and then stopped at this fib area, and you can see subsequently now New York is closed. As we head into the Asian session, we went sideways. So for not a lot of work and honestly not a lot of risk, let's see, what was the maximum drawdown we experienced? I think was like 10 pips. Yeah, 10 pips. That's not bad. You could have, I used a 45 pip stop, actually probably could have used a 25 pip stop and made it a bigger order, but I just like to be consistent because we never know what's going to happen on the pullbacks. So we always want to protect ourselves. We had a good double area, which was the range. So I really, really hope you guys profited from that move and on to the next segment of the market. So does this mean that now gold has turned bearish? No, it does not. Why do I say that? Well, really, this was our first whack at this fib area at 13.12 after our bigger move before. And it's not surprising that it would reject the first time. We may be making a second run at it. There's a potential that maybe on Friday we'll break through it, but I won't be trading then, so I don't care. But if we are to head lower, we're going to want another good strong breakout. I would say that a good potential is just a good solid break of the fib, and we have to come back inside this trend line. So if it doesn't break below 1282.50, we wouldn't want to take it. And that's going to wrap it up for this week in awesome gold trading. I wish you guys the very best. You'll be seeing this the week after. This will be posted out on the blog. So catch you guys later. Happy trails and great trading, guys. Bye. Hey there, gold traders. Omar here. I know I said in the last clip that I was done trading for the week, and I may very well be. I'm not sure. But I figured, while I'm sitting here watching the market, I would try to establish a potential area that would interest me. And of course, I still maintain that a good break to the downside should pull us back within the trend line. And there's a bit of traffic here before we get to any open area and the next fib. That being said, I still think trades are possible. I'm just going to be much more aggressive with my trade management because I don't want really to give anything back on what I've made so far, and I don't see that the gains are going to be particularly broad. What I've had a little bit of difficulty as well is establishing the area, so to speak, because there's really a few different things going on here on the chart that are appealing. So there's actually the top trend line was the harder one. You can see that's not really a breakout, so I went ahead and deleted this line. I've created this channel instead. Really, it's the outer, the upper and the lower part of the channel that matters. I'm just drawing the middle channel so you can kind of see my work as I do. So the bottom and the top are really the channels we're worried about. And this middle channel is also interesting because the bottom channel is established by two extreme spikes. They're not extreme in the sense that they're big. They're just bigger outside of this range here. So definitely we'll want a strong pulse, a strong breakout of this area. The top trend line is also kind of tough. I was going to go horizontal line. It seems to be 1292. You can see if I put it in at 1292, you can see it's actually pretty pretty good. So instead of the upper trend line, we'll just stick with 1292. I just want to try to make sure, possibly delete that, because I never found it as a major area before, but it certainly seems to have relevance today. You can see that in yesterday's session, stopped perfectly there. It's cap price here, cap price here, cap price here, and then the last 3 hours. As we get into the third hour of London now, it's also cap price. So go ahead and hang on to that. If we get a good sharp break above, then we'll take the long. And if we get a good sharp break below, we'll take the short. So we'll catch back up maybe by New York. By the time New York opens, we'll have some action. Maybe not, though. We did get a big move yesterday, and a lot of times when we get a real sharp move like that, the market goes back into sideways motion. That's what we saw after NFP, is that we floated a little bit up and then we locked into some sideways action until we got the breakout yesterday. So that may very well happen, but if we do get a good breakout, for me this would be preferably above 1295 for the break. So we'll see. Catch up in a little bit. Alright, quick little update here. I've been watching this candle, and even though the minor trend line really wasn't of that importance, you can see it's actually supporting price. Price did attempt to get down to the lower trend line, and I actually thought we were going to hit it, but or we were going to break it, but it didn't happen. It's retreated. We got 8 minutes left till candle close, so it doesn't look like this is going to be the one. Unless we get, a breakout in the last few minutes. But that being said, this candle has reinforced how good the bottom trend line is, and so this is almost a good 3-touch. If it finishes that way, we can actually adjust it to make sure it touches 3 times. But you don't have to. I mean, it's a very minor thing. And since we already have 2 good points establishing it, we'll just leave it the way it is. Just wanted to throw a quick update there. Who knows? Maybe we will get this breakout. Usually, though, we need a stronger looking candle, and waiting for the last 5 or 7 minutes of the hour is not generally what we are looking for. So it might come in the next hour, might come in the next couple hours. Since it's 2 hours till New York opens. Maybe we'll get it right then and there. So we'll check back in a little bit. Quick little update with 15 minutes left to go in this next candle. You can see that after trying to move down, it's now trying to break out up, but it's having one heck of a time getting through 1292. Don't know what's going to happen in the next 14 minutes. But let's go ahead and talk about the minor trend line. I just kind of put it in there on a whim. Ended up being, I guess, a pretty important area. Let me show you on the 15-minute. Okay, so this is a 15-minute chart, and you can see my minor trend line here. And price swooped down, looked like a pretty bearish looking 15-minute candle. Attempted to hit the lower end and closed right there. Next candle moved up, and now it looks like we're trying to move back up above 1292. My feeling is that we'll probably not break it. Again, if it's not a strong break, we don't want it. If it just pops its head above 1292, that's not a breakout. That's a fake out. Usually, I'm not saying it can't go on from that point, but this is just one of those things. When you're trying to filter out the trades that have a better chance of losing, that's how you filter them out. Gold lets you know pretty positively speaking that it's going to make its move. Yesterday I took kind of a higher risk trade with my first entry, so it's not normally the craziest breakout, but the second hourly candle afterwards was definitely a good breakout candle. It had a good good double area it broke out of. It was a good healthy sized candle. So you kind of have to understand the spectrum of risk depending on what kind of candle you're trading. I'm not saying that you can't trade small breakouts, but they just don't tend to be as high probability as the bigger ones. But of course that goes to a limit. And I've self-imposed a 150 pip breakout candle limit. Although, I'm almost willing just to throw that out the window because now over the last few months I've seen 200 plus hourly candle breakouts that did continue on for 50, 60, 100 pips more. It's just we want to try to give ourselves the best chance, and so I was trying to find the sweet spot with breakout candle sizes. But anyway, we'll do an update. It's got about 12 minutes. I don't see this as becoming a breakout, so maybe we'll have to wait till New York Open before we see any action. Maybe we won't get any more action. There is a possibility that this was the one move of the week, and now we have to wait till next week to get the next one. But we'll check back later, see if we can't make some money from gold again. Hey again, guys. Omar here with a little bit of an update. We just had back-to-back fakeouts. We're discussing this in the forum. We had 2 fakeouts, and this is why we don't take trades mid-candle. Trust me, when the candle was fully extended and heading towards 12.95, it looked like a breakout. But you can see by the time the hour closed, we broke above our important price point, but barely. And that's why we don't take little pop-outs. We look for strong breakouts. And then, no less, the next candle, ooh, boy, it was a strong-looking one, just plummeting. And keep in mind that this candle itself, from top to bottom, is 82 pips, right? So that should have done it. And man, when it was touching 1285 down here, it looked like we were going to get a breakout. But by the time the hourly candle closed, look where it retreated to. Back into our lower trend line area, which we have seen all day as important. So just imagine that you had been like, oh my gosh, I don't want to miss the move. Just want to get in. Oh, it's already broken below these areas. It's going to continue. And you had taken a trade here, or in my case, the way my luck works, I probably would have caught it there. Now you would be talking about over 50 pips from that point. So if you're using a 45 pip stop, you just lost your trade. If you're using a 60 pip stop, you're getting awfully close to losing. And actually, let's see, if you had taken it at the worst, yeah, you probably with spread would have been popped out. And it may be in that case it might be a sickener, because there's nothing to say that by the end of the candle this doesn't just come crashing down. But we want confirmed entries. This is like I said, with the tricky part with gold is a lot of it's the patience. Because we have such big volatility, and we can have a single hour candle move 82 pips from top to bottom, we can't risk not taking confirmed entries. We have to take only confirmed entries, and the only way we confirm our entry is the 2-step process which I've outlined, which is identify proper support and resistance and areas of breakout potential. Number 2, wait for that hourly close to confirm. If you don't follow those 2 rules, you are going to get shredded in gold. You're just going to get shredded. It's a great market. Yeah, it's fun to make 160 pips on the breakout, but on a day-to-day, long-term basis, how are you going to protect yourself from getting stop after stop after stop? Especially because after, if you got stopped out on the short side here, and then it reversed and went down anyway, psychologically that's going to do a lot of damage. Because you're naturally, as a trader, going to think, well, should have used a bigger stop, should have used this for protection, that for protection. So maybe next time, even though you've been trading with a 45 pip stop, next time you trade with a 90 pip stop or 100 pip stop. And one of 2 things happen in that case is that either your lot size is smaller to compensate to keep your risk percentage accurate, and a good-sized trade becomes watered down. Or the more dangerous of the two is that you continue to use the same lot size but just use a bigger stop, which increases your risk. And in the case from 45 to 90 pips, it doubles your risk. Or in the case of keeping consistent risk, it cuts your order size in half, which will water down your winning trade. So that's why it is so crucial to be disciplined and patient and wait for the good opportunities rather than just trying to take a trade because the market is moving fast. You just have to get used to gold moving fast. You just have to know that, oh, gold is super fast, it's very volatile, and I can see big swings, but that doesn't mean we jump after everything that looks like it's going to run, because it might not. So I think I'm beating a dead horse here now, but on the other note, the forum's open. I'm going to try to be as active as I can, guys, in there. But okay, if you had the 60 pip stop and you ended up shorting from the bottom, you definitely would be blown out by now. Anyway, so let's see if this moves. I'm going to go ahead and watch till the end of this candle. If the end of this candle doesn't produce a trade, I'm done for the week. I think we've had a really good week, and I'd like to go into the weekend maintaining the gains that I've made. So definitely a lot to celebrate about this week as far as the move that we got yesterday. We don't want to sully it by taking a bad trade now. That has been a calling card of mine for so many years, is that I'm really good at destroying big gains. So I made a promise to myself this year when I started trading this heavy market gold that I wouldn't make those same mistakes. Anyway, I will catch you guys at the end of this candle and we'll see if there is a trade.